trading with a PEG ratio over 1.5, and then a forward PE of 40 and a trailing PE of 323. Today, what our goal is to get a price target for Pinterest, update what they're telling us as far as guidance goes, and what we can project their growth rates to be. So Biden just dropped a bill stating he wants to quadruple tax any companies that are doing share buybacks. Boy, oh boy, is that going to ruin any sort of EPS growth for a lot of companies. Anyway, I digress. Let's talk about Pinterest as they're about ready to report earnings here in the next hour or so. And what I want to do is tell you how this stock got away from me, but I'm very, very curious to hear what their earnings are going to do. By the way, if you're new to the channel, welcome in, consider subscribing and smash the thumbs up. So Pinterest trades for a pretty substantial premium here when we factor in a PE ratio on the trailing 12-month over 300. Now, I like this company, but I think it's expensive. The price action got away from me on this company as it was around $16 a share, but I roughly have a $14 price target on the stock. Wanted to sit back and wait for things to kind of froth out with a lot of these companies that had high valuations. Oddly enough, Pinterest is one of the companies that have held their valuation even through this market volatility and even through what happened with Snapchat along with the fall of Meta. In fact, over the last 6 months, price volatility is pretty high, but the trajectory of the overall stock has been up, going from $16 a share to $29 a share, and it's held above this $25 mark pretty strong. Now, Pinterest to me is really a unique value proposition when we compare a lot of other social media platforms. It's a way to collaborate, get new ideas, and they also have a pretty loyal clientele that pays a decent revenue. So the people that join Pinterest tend to stick with Pinterest and are willing to spend some bucks. And I like that about their business model. So when we look at top line revenue going from 1.1 billion up to 2.7 billion over the last couple of years, tremendous growth here. Now we're starting to see a little bit of a slowdown, and this is where I'm hoping to possibly get the market reaction that I've been waiting for on Pinterest. But once again, this thing's been holding very strong. And we've watched their operating income go from negative 1.3 billion to negative 142 to actually going in the positive here. And this is why I started to keep an eye on Pinterest. I'm curious to see if they can keep this growing, if they can keep margins growing, and if they can keep user base growing. The reason why I find this stock expensive is that their growth rate is coming down, but yet the premium on this multiple is still there, which usually lends for a tremendous downside risk in a lot of stocks. Over the past 5 years, it's been explosive growth, but as we can see here, they've definitely hit a wall. And the question becomes, with the new management in place, are they going to be able to get through this wall and really get growth back on the right track? And if they do, I might miss this one, but if they don't, could lend a buying opportunity. We're looking for roughly 28 cents EPS, and from a GAAP standard, 6 cents of EPS. When we go down valuations, guys, it's trading for a substantial premium to its peers, especially when we look at EV to EBITDA. And if growth is slowing down, I think you have to really put it in line, and we could see a heck of a pullback in this stock. So I caution people, if the growth is slowing down, to really watch out for this one, as it definitely could get back to the teens pretty quick, in my opinion. Now, of course, if growth rates are coming in higher due to the management that they recently got, bringing on new management like Bill Ready, who originally worked for Google. So with the recent fallout of companies like Snap and Meta, it's going to be a really interesting setup here for Pinterest. So right now, we are just waiting for earnings to pop off, and we're going to get a price target for Pinterest. Okay, and it looks like Pinterest just dropped earnings, and the stock is collapsing down to $25 and change. And this is exactly what I was talking about, ladies and gentlemen. This is all about valuations. Now it's dropping down to $24 and change. So we can see here that, it really does matter to really be conservative in your valuations here, because this is a pretty substantial move to the downside. So Q4 revenue grew 4% year over year. And as I stated, guys, what was the big thing with the stock? The high multiple here, that it just seems pretty nuts when you compare it to how much they're growing. And the market is punishing the stock, I think, in a fair manner here. So actually, when we compare the full year of 2022, or the 3 months ended in 2022 here, we're seeing that net income was stronger last year than it is this year. And from a non-GAAP basis, obviously as well, adjusted EBITDA was way stronger. Adjusted EBITDA margins were stronger. So this is not a good earnings report here for Pinterest, guys. And a substantial difference on non-GAAP net income, a substantial difference on adjusted EBITDA. This is pretty ugly, guys. I would not be surprised if this sells off substantially. It's actually finding a bid here at $25, which I think could be the share buyback. So yes, top line revenue is growing, but we're seeing problems with margins here. They might be overstaffed. They might be overspending. Cash and cash equivalents are up. Marketable securities are slightly up. Accounts receivables are up. So just to kind of go over, guys, net income was a loss versus 316 million gain of 2021. So full year, they actually lost money. When they add back in stock-based compensation, depreciation, we can see here it gets it a little bit closer in line from a net cash provided by operating activities here. I'm actually surprised it's not down more, but maybe it will be down more. So let's plug in this analysis here and see what we get. So we had 20% revenue growth, which we obviously know that is going to change pretty drastically here. So I'm going to use, all right, so I have them growing revenue at 9%, 5%, 4%. The reason why I did that is because that puts it in line with 2.8 billion in revenue for the full year of 2022, which is spot on to what we got here. And then next year, I project them doing 3 billion, 3.3 billion, and then slowing down from there on in. Pretty disgusting overall. The one bright spot I can see here is that the full year of 2022 actually had 16% EBITDA margins, which jumped up for the quarter. So that's actually a good thing to see. So I could bump up EBITDA margins, saying that actually might be a little off. So let's use 17. So yeah, now that gets me closer to a $11 or $12 price target. So, I'm definitely in the camp between $9 and $12 is about what I would be looking for on a company like Pinterest here. And that's still taking on a lot of risk considering that they're not making money now. As always, guys, appreciate your time. Thank you so much for tuning in, and we will see you in the next one. Peace.